At just 23, Lachie Duncan is already making waves in the world of fintech. With a background in finance and data analysis and entirely self-taught in coding, he's now studying full-stack engineering, all while building a platform designed to change the way Gen Z invests. As the founder of Pocket Advisor, Locky is on a mission to give young Australians the confidence to start investing, tackling the stat that only 22% of Gen Z own shares by showing them exactly where to start.
Nice.
How's that intro?
That's pretty good. You nailed it.
I guess my first question is, can you actually walk us through your career before founding Pocket Advisor? Like, what experience shaped your understanding of the world and the financial markets and the Gen Z population?
Yeah, sure. So I started investing in stocks when I was like 15 years old. I was still in year nine, and probably like most people my age, I was very interested in making money, and stocks just happened to be the thing I landed on. As you can probably imagine, I made a lot of mistakes in the beginning. It was all trial and error, and the money wasn't much, right? Like it was just a couple $100, but the main idea was to learn about the market and how to make money, and that sort of early learning has really, put myself ahead, right? Like I started investing way earlier than normal. Yeah, so then a couple of years later, I started writing for a blog with a very small audience. I pretty much was writing about what I was learning in the stock market to try and help my friends also start investing. Then, so I went to Melbourne Uni, studied commerce, and got a job at a stockbroking company. And so it was at that job that I realized that the financial advice system in Australia is sort of broken. So the cost of advice is so extreme that pretty much everyone my age just simply can't afford it. And when you think about compound interest, the sooner you start investing, the better. And these people who are my age who really could benefit from advice the most, just it's inaccessible for them. Also, I learned like what it is that these advisors do, right? And maybe like my sort of fresh perspective on things, I was like, why can't this be automated, right? Like with today's technology, especially with, AI that's come out relatively recently, it just feels like this sort of thing could be automated for much cheaper. And advice could be made accessible to all these people who can't currently afford it. So 2 years into my job, I decided enough was enough, and I quit, and decided to start a business, which is what I'm doing now.
Wow, that's awesome. So you started buying into stocks at such a young age. Did you have much success when you were starting out, or was it because you yourself, you're 23, you're technically in the Gen Z range as well,
Yep.
where it's like people between 15 to 35 right now. So how was that experience being very new to the experience of buying stocks? Like, did you have much success then, or was it difficult then as well? And that's what led you to be so knowledgeable in that
Yeah,
area?
so I definitely, in the very early days, I did not have much success at all. One of the, I remember the first stock I bought, I didn't even know what the company did. So I was buying it off some technical indicator that I'd probably watched like a YouTube video of some guy walking through how to day trade these things, and I didn't know any better. I bought a stock and I lost money on it, and I later found out that it was some tobacco company, which, right, like that's not an industry I want to be invested in at all. Anyway, and yeah, like I mentioned, like the money in the beginning was very small anyway. Like I was only investing with a couple $100. So if I lost money, it didn't really matter. And the what I learned was so much more valuable. That's also why I think it's so important for young people to start early, because having that experience really puts you miles ahead.
100%. And yeah, the whole stock picking process, it actually takes a lot of work, doesn't it? You really need to look into each company and also confirm whether it aligns with your values as well, right? Like you don't want to, like you said, invest in a tobacco company if that's not like genuinely what you're interested in. So walk me through the process of actually researching these companies and how much time does it take and like,
Yeah.
yeah.
Yeah, for sure. So it can take a lot of time, which is perhaps like one of the barriers that prevent a lot of young people from investing, right? Like they think it takes so much time and effort, which they just can't be bothered, right? But there's a really, really good book which everyone should read, which is called One Up on Wall Street by Peter Lynch. So the premise of the book is that any person can beat the market by applying what they already know. And what he means by that is everyone has like a circle of competence, right? So your hobbies, your career, your interests, whatever it is, like these make up your circle of competence. And that if you buy stocks inside that circle of competence, it puts you miles ahead of anyone on Wall Street who doesn't have that real world knowledge in that particular area. So yeah, your circle of competence could be like, it can be as simple as just observing the world around you. Like back in maybe like 18, when you notice a couple more Teslas on the road than normal, right? That sort of thing. You notice that every single person seems to have these little AirPods in their ears, right? And that's Apple stock. So actually, a recent example that people might be familiar with is like those big water bottles, like the Stanley cups, like the metal things.
Yeah, the Stanley Cups. Yeah,
Yeah, the oversized fucking
yeah,
bottle things.
with a sippy straw.
Yeah. So those like shot up in popularity, right? And while the company that makes them is not public, like the retailers that sold those actually saw like a tangible boost in earnings just from that one product. Yeah. So if you're sort of like noticing these things, it can actually be a huge advantage and it can actually be your sort of differentiator to make money in stocks. So it acts as like your source of investment ideas, right? And it sort of simplifies the world down, right? So you have your little circle of competence, which is, all the things that you're knowledgeable about and that you know about, and you just invest inside there. So the whole universe of stocks becomes much smaller and much easier to manage when it's just things that you're familiar with already.
Yeah, that is a really good approach because it is so overwhelming looking and finding individual stocks that, maybe your friends are talking about, but you just have no clue. But having an approach that filters it down into the familiarity in your life really reduces it to only things you see. So, what would you say your circle of competence is? Is it those ones that you just listed, or?
Yeah, well, definitely for me, it's more tech, right? I started teaching myself how to code. Now I'm studying software engineering. I've always been interested in tech as well, actually. But that means that I sort of have my finger on the pulse more than maybe like the average guy on Wall Street, right? So yeah, things like Microsoft, for example, like back when ChatGPT first came out and Microsoft had that deal with OpenAI, I was able to identify that Microsoft was quite far ahead, relatively speaking, than all the other big tech stocks in this new sort of AI theme, right? So I invested in Microsoft, but that's not necessarily the case today. Like I think other big tech stocks like Meta and Google have now caught up. Yeah, so it's just being able to identify little things that people might not notice like that.
Yeah, it's all about the right timing when it comes to investments as well, right?
Yeah.
And I'm so glad to hear you got in at the right time for Microsoft. Let's actually talk about the startup you're building, Pocket Advisor. What is Pocket Advisor, the startup you're building right now?
Yep. So with Pocket Advisor, we're on a mission to bring the experience of personal financial advice to every Australian through their device. So the regulatory landscape in Australia for this sort of digital advice is strict, to say the least. So at the moment, we're in early access, and instead of providing advice, we're doing two things. We're providing research, so you can sort of find the stocks that you might want to invest in, and we're providing education, so you can actually understand the information that we're giving you. So it's sort of like DIY investing. Like we give you everything you need to then go and do it yourself. And it's trying to give young people my age like the confidence to start investing.
And which is amazing because there are very little tools that are willingly going to give you advice on the market. And, you have to chase the news almost to actually know what's going on with the market all the time. And it's so overwhelming starting up. I want to ask about the choices that led you to make those the features of your startup. What are the stories behind these decisions and the kind of motivation towards it in your personal life that led you to build Pocket Advisor?
Yeah. So I think so I was investing very young, and at that point in time I didn't have many resources at all to tell me what to do. So I think I understand more than most like the ins and outs of those very early stages, all the pitfalls and, hazards that young investors, might trip up on when they're starting out. So with Pocket Advisor, I really want to address those issues and sort of make those early stages a lot simpler and easier.
That's awesome. And what about your experience in that stockbroker firm? How did it influence your approach to give financial advice to Gen Z?
Yep. So when I was working, most of the clients are much older, like yeah, sort of in transition to retirement or retirement, and they have a lot of money and they can afford to spend thousands of dollars just to have someone sort of look after their money. They sort of like to, I don't know what, yeah, they just like to have someone there to sort of like hold their hand and sleep well at night knowing that someone's looking after it for them. That sort of experience is not accessible to people my age, right? And like we can go into stats like Gen Z, for example, there's never been a generation more financially stressed than Gen Z are right now. And while these advisors are charging thousands of dollars, just to sort of hold these people's hands, right? They're not what they're doing is not rocket science. Like personal finance is not rocket science, and they're charging thousands of dollars to do these things which are easily sort of replicable. And while Gen Z is the most financially stressed they've ever been, there's a huge gap there, and it frustrated me. There's huge motivation for me to quit my job and actually do something about it.
Yeah, like they say, the rich get richer and the poor get poorer. But I guess what you're trying to do is bridge that gap a little bit more and give the financially stressed Gen Z a chance to get closer to richness. And
Yep.
I think the thing about Gen Z is we grew up with social media, and social media inevitably became a place about making money and showcasing money as much as you can. And so even though like I've known some people that make maybe 15 grand a month, but yet they still feel financially stressed because of how they spend and how they ultimately use their money on useless things, right? Like going out partying and buying expensive items that don't really add to their asset base. So what you're doing with Pocket Advisor is amazing, and I'd love to be one of the users on your platform as well. Now, you did mention that you're targeting a bunch of people that, like, what you noticed from your previous job is that, like, there's a lot of older people with people holding their hands. But what do you think uniquely targets Gen Z investors that are challenges that you never really force?
Okay, like what's different about giving advice to Gen Z? Yeah, I think yeah. So Gen Z's like the first generation that's grown up completely with technology, right? So Gen Z, for one, is more willing to adopt sort of alternative or digital advice solutions. They're much less skeptical than maybe some of the older generations might be. At the moment, the need for advice for Gen Z is being filled by social media, like you said. So social media is free, obviously, but there's a huge problem with social media, and that is that we only see the outliers. So like influencers who might have made a lot of money in one particular, stock or crypto or whatever it is, and then they sort of rise in popularity, and then they start saying, oh, it's easy, just, buy crypto or buy penny stocks or whatever it is. We don't get exposure to all the thousands of people who have done exactly that, and actually, it's been devastating for them. So what we see through social media is incredibly biased, like survivorship bias,
Mm.
and it's not good advice for most people, which is a problem. The other thing, like for Gen Z, like you might get, I don't know, yeah, like so we have our extended family, right? Like our grandfathers and uncles and stuff, and they might have made their money a particular way, and so at Christmas lunch, they're telling you, oh, it's easy. You just have to buy, penny stocks or whatever it may be for them as well. So we're getting all this conflicting information. It can be so overwhelming. Like, what do we listen to? You know what I mean? And there's no sort of single source of truth, to clarify things and, really make it clear exactly how to build wealth.
Yeah, that's so true. You do want to just cut through the noise with financial advice. So with that in mind, right? You said you're using the platform in which Gen Z normally consume their information is through technology, right? What specific designs and habits did you pick out in designing your product?
Yep. Okay, so like how have I designed my product to cater specifically for Gen Z?
That's right, yeah.
Yep. Well, Gen Z, I think they, well, here you go. So it's very hard to change people's habits. So Gen Z have a very low investment rate to begin with. Like you mentioned in the beginning, that only 22% of us own shares. And it's a bit like going to the gym. Almost everyone should probably go to the gym, but most people just don't do it because they've fallen into the habit of not going, and it's very hard to actually break that habit and make that transition. It's the same with investing. Most young people don't invest because maybe they don't know about it, like they don't know where to get started, or they are feeling overwhelmed, like we've been saying. So I think it's essential to, yeah, eliminate the noise, really clarify things and make that transition as simple as possible. You know, convince young people that, the water's fine.
hmm hmm
It's not as difficult or as scary as people think. Yeah, so when I'm designing my platform, I really want it to feel like you have someone there with you, holding your hand and looking after you.
Mm.
I want it to be sort of interactive and, collaborative, like it would be with a real financial advisor. Yeah, so that's the experience I want to bring into the app.
Yeah. Let's actually drill into that. Tell me if I was, a consumer on your platform, walk me through the journey of being a user. Like I sign up and what happens?
Yep. So when you sign up, you get to pick an investment strategy. So we've got 6 different options, and the investment strategy determines what sort of stocks or ETFs might be suitable for you. So we can't provide advice at the moment. So all we can do is say, hey, you might be interested in this, but you have to make the decision on whether you want to buy it, which is not ideal at all. And I'm really sorry that I can't actually provide advice.
That's a future thing,
But
right?
that's where the education comes into it. So we try and give you all the material that you need to actually be able to make those decisions yourself. So after you select an investment strategy, you can then populate your portfolio if you have any existing holdings, right? So that we know, hey, you've already got BHP in your portfolio. We're not going to sort of recommend, we can't give advice, but we're not going to like recommend that you buy BHP, that sort of thing. What we can do is we can tell you about sort of diversification and sort of building a well-rounded portfolio that sort of has minimal risk but will maximize your returns. Yeah. So once you've done that, I suppose the core feature of the app is the interactive chat. So we've got a large language model which has access to your portfolio and your investment strategy, and you can ask it any sort of question you want, just like picking up the phone and calling a human, a real advisor. So we can also, any event that happens in the market. So yeah, if a company you own reports earnings, or if the US announces tariffs and you're like, what on earth's going on? So we can sort of clarify that for you and condense the information, and we'll send you an email saying this is what happened. You don't have to worry about it. Blah blah blah. This might actually be a positive for your stocks, or it might actually be a negative. You might want to reduce your exposure and that sort of thing.
Right, right, right. So if I was already investing in BHP and I went to your large language model and asked like, hey, does the tariffs affect the BHP stocks I hold? It would give me a response and
Yeah,
direct me to the right direction of whether I should be
yeah,
selling this stock right now
yeah,
or
one hundred
buying
percent.
more.
100%. And in its response, again, because it can't give advice, but it'll direct you to the educational material, on sort of tariffs, what are tariffs, that sort of any relevant material to help you make that decision. Yeah.
And does that model consume the information of my holdings already, or do I need to tell the model
Yeah.
about it?
Yeah. So it only has access to what you tell it about. So
Right.
if you don't want it to know about whatever for privacy reasons or whatever, you don't have to give us that information.
Okay, okay. And that information is not what's already saved on the platform, it's actually inside the chatbot, or whatever's on the platform is already funneled into the
Yeah.
chatbot.
Whatever you input into the platform in that beginning onboarding process, the chatbot will be able to bring that information up on demand, like in the course of the conversation that you have.
Oh, okay, that's beautiful because that's exactly what a financial advisor would know, right? Like you're not
Yeah.
going to be like, "Hey, I've got these stocks. Can you give me advice?" It's literally got all the information in the back
Yeah.
of his mind
Correct.
and giving you the right information. That's awesome. That's actually really cool. To be able to, make the questions a bit easier because, the idea with chatbots is you have to explain so much to get the right answers. Having that information already built
Yep.
into that chatbot is amazing.
Yep. Yeah. I really like that was the experience at work, right? Like phone rings and the client's like, I'm worried about the tariffs or whatever. And you go and pull up the client's portfolio. What are they holding? You've got to sort of connect the dots. The client's concerned about this thing, whatever it is. And you have to sort of on the fly figure out how it's going to affect them and, what they should do, if anything. So it's automating that process, like through large language models. Like they're really good at consolidating information. So we're
Yeah,
leveraging that strength to give the experience of having a financial advisor.
yeah, that is awesome. I want to talk about habits of investing, having a platform that helps you build your stock profile and portfolio is awesome, but it all falls apart if it isn't for certain habits. Can you walk us through any habits that it's not, this is not financial advice, of course, but just habits that people should adopt in order to be a successful investor, especially the Gen Z?
Yep. So you might have heard the saying that time in the market beats timing the market. So what does that mean? So markets happen in cycles, right? So we go through these phases of like bull markets, bear markets. It's a cycle that continues forever, and it can be very tempting to try and pick the time that you're going to buy or sell these stocks, right? So you're trying to anticipate these cycles, which really no one has much success with. Like you can look at the stats, and only 20% of active managers have outperformed the S&P 500 over a 15-year time period. So that only 20%. So 80% of the people whose job it is to buy and sell stocks, yeah, 80% actually underperform.
Yeah, so
Um,
the slow and steady approach is the best approach, it seems like.
yes, absolutely. So yeah, so time in the market, right? So you have to resist the urge to start trying to pick the bottom, sell at the top, that sort of thing. You just have to stay invested for as long as you can and let compounding take place. There was one of the big brokerage firms in the US, I can't remember which one, but they did a study of their clients to see which clients were sort of making the most money. And what they found were the clients making the most money were actually the clients who had not logged into their account for an extended period of time. Like maybe they've actually passed away, unfortunately, but their portfolios have actually been the ones that perform, the best because they're just simply just invested through thick and thin. They're not trying to time the market, and they actually outperform that way. And in terms of habit building, so most brokers let you set up a recurring sort of investment schedule, which is really good to do. So say you get your paycheck on like the first of the month or whatever. So you set up a recurring investment schedule to after you get your paycheck, just transfer a portion, whatever you're comfortable with, straight into your brokerage account automatically. And that is doing, that's as simple as it needs to be. And it's building that habit of just investing regularly and ignoring market cycles, right?
Mm,
It's about time in the market, not timing the market.
that's right.
Even if your broker doesn't support like recurring investment schedule, even if you just do a recurring bank transfer from your bank account into your brokerage firm, and then if you have to go and manually buy the stocks, right? Even something like that, that's building the habit. It's like it's like going to the gym. So people who struggle to go to the gym, one of the ways of actually building up the habit is to get yourself to go to the gym and not even work out. So you go there and then you leave. And it's like, well, what's the point of that? Well, it's the habit. You're building the habit of going to the gym, and then eventually you're going to the gym and it's like, okay, I'm there, I may as well go and work out. All right.
Yeah.
It's that sort of thing with investing.
Yeah, yeah, you got to really put in the time, and I like that analogy of going to the gym because a lot of people do go to the gym, and it makes zero sense for you to be there and not invest your time and energy on actually building stronger
Yep.
habits on the investment world.
Yep.
And that statistic, 80% of the highest earners of investment portfolios are literally people that don't touch it. That recurring investment approach, that's what they call dollar cost averaging, isn't it?
Correct. Yep.
Yeah, which might be a terminology that most people might not know
Mm.
because I think a lot of Gen Z actually are in the crypto space, and the crypto space is so volatile, right? And fluctuates so quickly that time in the market is virtually non-existent. But some of them yield a lot of success in a short time frame with
Mm.
those, right?
Mm.
Well, what are your views on people in the crypto market as opposed to traditional stock investing and ETF?
Yep. So I actually have about 30% of my portfolio in crypto.
Wow.
And the reason is, so crypto is a risky asset, right? But I'm young, so I have a long time horizon, and I'm investing with money that I, in theory, won't need for years. So it means I can afford to ride out any sort of extended downswings in the market.
Mm.
And it's, yeah, so there's like, so the risk reward relationship. So risk is the price you have to pay for reward. Now that doesn't mean just go out and buy the riskiest possible things,
Shitcoining.
without a second thought. So it's a calculated risk, and it's money that I'm comfortable with leaving invested for years, and I won't actually need to access. So when the market has these massive downswings, it hurts, but I'm not, I'm not kicking myself over it because I've said to myself, this is going to be a year, like years. This is going to be a year-long investment. The other thing is, if the market has these massive downswings and you get scared and you sell, the biggest increases in price happen like during these downswings. So if you've sold, most likely you will actually miss out on the biggest, upswings following the downswing. And then you're like, oh shit, now I got to buy back in, but you've missed out on that, and your returns have actually suffered from you doing that. So that's why you buy and hold, right? And it's a calculated risk, and you have to be comfortable with those short-term fluctuations.
And people who invest in those times where they sold at a loss, right? And then they're like, oh, wait, it's going back up, enter in the market again. At that point, it's like a FOMO type of investment, right?
Yep.
And maybe that point you entered in, it wasn't, exactly going to an upstream straight away, and then it
Hmm.
drops again. And people are like, oh, maybe that was a bad time. And then would sell out. And you get into this trap of like buying and selling, trying to time that market,
Yep.
and you eventually like losing your money by
Yep.
literally trying to time that market,
Yep.
isn't it?
Yep. Well, it's much easier said than done because humans are emotional beings, right? And especially when it comes to our money, we get emotionally attached to this stuff. We feel like the pain of loss more keenly than, the happiness of making money. Like we're
Mm.
more we're more it's like we're protective of what we have. And it goes back to our psychology, like back in sort of hunter gatherer days. If you hear like a twig snap in the bush, you just start running. You get up and start running straight away. You don't sort of think twice. So that the when the market falls, it's very easy to be like, oh, I got to get out of here, because
Yeah.
you start getting protective of what you have. So you have to go against the grain, like against your human nature, which is what makes it so hard, but also so rewarding if you can do it properly.
It's really going against our psychological habits in when it comes to investing, isn't it?
Mm.
Even though you're in crypto, right? You're you're investing in crypto. You're not actually like investing or trading in shit coins and
Yeah,
buying like the cheapest things in the market, right? Like, are you pinpointing like the highest,
yeah,
mainstream
yeah.
coins out there, or
Yeah,
what's your
correct. Yeah,
approach with
like no,
crypto?
no meme coins or anything like that. Things that actually I believe have some sort of utility, and it's usually like the top 10 in terms of market cap. So all crypto is risky, but at least if you have some sort of utility, you have some sort of fundamentals behind the price. So I believe that this technology that is the blockchain will actually be adopted over the long term. Who knows when that will happen, but I believe it will happen. So that's sort of like the long term driver of, the price, right? If you ignore all the sort of swings in the short term, I believe that over the long term, the adoption of this technology will drive up the price. So that's what I'm investing in. So I'm not trading these short term swings, which, are highly unpredictable. That's not what I'm doing at all. I'm investing in the underlying technology and I'm holding it for the long term.
That's awesome. Look, I just want to know, with your platform now, how would I find it? What do I search up, and
Yeah.
what do I need to do to get on board?
So you can search Pocket Advisor in Google, or you can go to Pocket Advisor with an E, so SER on the end, .com.au.
Awesome, awesome. Well, thank you so much, Lachie. This has been a great session. I mean, I've learned so much about like the investing world and building habits to really upscale the tangibility of making money and how long it really takes for someone to build wealth and have that financial security. So thank you so much for today's session.
You're very welcome.